We are live. Happy Monday to everybody. This is Mike Miazga with the American Supply Association. Welcome to another one of my COVID-19 town hall interviews. Today I'm talking with Tulsa, Oklahoma-based attorney Al Givray. Al is going to talk to us today, very familiar with the SBA small business loan program that we've talked about a lot on this platform in weeks past. Al has more than 38 years of strategic leadership with companies across the world, including distributors and manufacturers. Al's specialties are what we're going to get into today, the loan application process with the Small Business Administration. He's also an expert with mergers and acquisitions and helping companies with capital raises. Al, good to see you today.
Good morning. Thank you, Mike.
In our email exchange over the weekend, you had a great opening line on the number one mission of a business is to make sure you don't run out of cash. And I think what we're going to get into today will certainly address that. That being said, how do you, not running out of cash, how do you ensure that in a pandemic that we're going through?
Well, the advice that I like to give is that you apply for loans everywhere you can. The SBA loans are pretty do-it-yourself. You work with your bank. They're in the SBA system. You follow their lead, and you do the best you can. So that's one source. A second source is what's called the U.S. Treasury Direct loans under the new CARES Act that President Trump signed into law. And then a third source would be what the Federal Reserve System is calling the Main Street Lending Program. That last program has got the biggest bucket, but it has not yet gone live. The Treasury Direct loans have gone live, and you have until April the 30th to apply for that. So the advice is apply for as many loans as you can. There's no restriction. And then make choices about what you need over the next forecast, 12 months, 18 months, and then borrow the money and have it on hand to do what you need to do with it and follow the restrictions and the strings attached.
Now we know that the SBA program, that's currently out of money, and they are, Capitol Hill, they're working hard to get more of that money in, and maybe we'll hear something more about that this week. But can you dig a little bit deeper first into the Treasury with the April 30th, and then hit a little bit on the Fed one as well?
Yes. So the Treasury Direct, they have three what I would call relatively small buckets that are dedicated to companies in the aviation industry, air carriers, cargo carriers, and companies that are essential to the national security. And then there's a fourth bucket, which is a huge bucket, $500, $600 billion. And those applications, they went online. The first wave the deadline was Friday to apply, and you have until April the 30th. And the art form there, Mike, is that you have to put together all of the information that the Treasury Department is asking. It's all online, and it's financial statements and what you need the money for, and how have you been harmed, and are you willing to give the Treasury an equity stake in your company, things like that, and are you willing to limit the compensation of your executives? But it's a matter of putting that information together and filing the application, which is all online, which is has its own brain damage, and that would be the Treasury Direct until April the 30th. The federal Main Street program that has been announced, that's a little ways down the road yet. They have not opened the portal for applications, but it'll be similar.
That sounds like the Main Street one would be more applicable to our members, distributors, manufacturers of plumbing, heating, cooling, and pipe products. Do you think with the Main Street one, how would you compare that to maybe the SBA program?
Well, the SBA program has some very definite limits to it and has a time horizon to it. The Federal Reserve part will have its own restrictions, but in a word, it'll be easier to qualify for that loan. And part of the interesting aspect of the Main Street is that the Federal Reserve System is making available the money, but it's actually being dispensed by banks. So for instance, let's say the Federal Reserve has $100 that it wishes to put out for somebody to borrow. So the borrower would have to find a bank within the system, which should be easy to do. And then the borrower seeks to borrow the $100 from that bank. Now, the beauty of the Main Street program is that the bank actually holds only $5 of that loan. The other 95% is sold, so to speak, to the Fed, and so the bank is assuming only $5 of that $100 worth of credit risk, which should make it easier for the bank to be willing to loan the money to the borrower. The restrictions of the federal Main Street lending program, there are restrictions, but they are looser than the Treasury Direct restrictions, and they're looser than the SBA restrictions, because the SBA is a very specific product that is designed to provide a very specific form of relief, whereas the other two programs are broader. You can use the money for more of your operational needs, not just your payroll needs, for instance, or rent or utilities, whatever the SBA says. If you have operational needs, as most people will, the other two loans will allow a broader use of the loan proceeds.
This is a tough time for everybody. Folks in our industry are, working hard. It depends on what part of the country. It seems businesses in certain sectors of the country are getting hit harder than most. What your advice when we were chatting offline is to overturn every turn over every leaf and look around every corner and see what opportunities are out there, correct?
Yeah, absolutely, Mike. One of the things that I like to say to people is that next to running out of cash, probably the worst thing you can do is miss opportunities. There's no question in my mind that industries will undergo consolidation, and the consolidation doesn't have to mean that there's a winner and a loser. We often hear in these kinds of situations that, well, there's going to be winners and there's going to be losers. Well, that's true, but it doesn't have to be that way. People can work together so that there could be a winner and a winner through consolidation. For instance, companies might wish to merge their businesses and score opportunities together, what some people call mergers of equals that you've heard in the news recently. Or one business might want to sell to another business and try to make a go of it that way, protecting workers and customers and markets and opportunities. It's a daunting task, but at least from where I sit, it's not insurmountable.
Well, I appreciate you taking a couple of minutes this morning to provide some very valuable information that I know our members will look for and take to heart. And we look forward to connecting with you down the line.
Okay, thank you very much, Mike.